Yeah. Uh, testing. How about now? Yeah. Uh, testing. How about now? Yeah, I feel it's better now. Testing. Yeah, my audio is back. My audio is back. So I predicted this by um, this early morning Asian section on gold, and price is pretty much heading towards my direction, and I love it. I love it. So I'm going to break down what I saw for this buy. This is how the market is, right? It is not magic. It is mastery, guys. This is not magic. I say this all the time. This is not magic. So I want to show you how I predicted this buy. I want to start from the beginning. I want you to share this link with your friends. Share. If you are, if you know someone that is not here, share this link with someone that needs to be here. If you know someone that is not here, share this link to someone that needs to be here. Just give me a second. Let me send this to my guys. Okay, so let's go. So, how was I able to predict that buy? How was I able to predict that buy? First of all, simple structure. From the higher time frame buyers, I saw that we already have a what? A break of structure. Let me not go, let me not go into the advanced. Let me just stay with the basics. Okay. We already have a break of structure. When I woke up this morning, I saw a break of structure, recent break of structure. Yeah. And that means that we have the label of lower high. As at this morning, when I woke up by 1 a.m., I already saw that there was a break of structure. Okay. And that gave us a label of what? Lower high. Lower high. So this lower high, that means I expect a lower low and price to retrace back into the premium. That was my expectation. Yeah. So it means that you can take advantage of that pullback. As a day trader, you can take advantage of counter trends and pro trends, right? If that counter trend is very highly probability setup, you can take advantage of the pullback, right? And when I saw this break of structure, we are currently here. And I said, okay, on lower time frame, we need to see a pullback before a what continuation. You either wait for the pullback or take advantage of the pullback. On 3 minutes, I said that okay, we can take advantage of this pullback if we see a certain pattern. So I said we can take advantage of the pullback if we see a certain pattern. And what was I expecting to see? So I went back to my daily to mark my previous day high, previous day low and previous day close. Remember on Monday, I said every day trader must pay attention to this data. Every day trader must pay attention to previous day high, previous day low, and previous day close. So I said, okay, low here. I have previous day close because we are in a bearish. Previous day closed bearish. Previous day closed bearish. Yeah, previous day close. Then I have previous day high, which is this guy here. And I said on Monday that when price is trading above the previous day close, at that moment, it's a bullish sentiment. When price is trading above previous day close, it's a bullish sentiment. When price is trading below the previous day close, it's a bearish sentiment. So for us to have a overall sell bias with this structure, I want to see price first trade above the previous day close, okay, and target the supply to now what sell. So there will need to be a buy before a sell because on the higher time frame bias, gold is still bearish. Gold is still bearish. I expect gold to still sell further to take out this liquidity target for a sell. Why? Because we are seeing gold respect this daily order block. One, why am I bearish overall for gold? Gold respecting this daily order block. That's one. Two, after respecting the order block, we had a distribution. This is the intention of the institutions. So the institutions have given us the footprint that we are bearish. After price tapped into our order block, we distributed out of the order block with this massive daily impulsive candle. Then price pulled back to balance this imbalance. So price pulled back to balance what? This imbalance. That's a fair value gap. Yesterday in the mentorship, we talked about key levels. How that order blocks, fair value gaps, and location are key levels that price will pull back into. Remember, if you're in the mentorship yesterday, Signify, we mentioned that are key levels that price pulls back into. Mentorship students, are you here? Yesterday we discussed about if signify and confirm if you are here and you where's my favorite letter? Okay. Yeah, we discussed yesterday, confirm that fair value gaps and other blocks are key levels that price will pull back into for price to continue. So look at what we have here. Price pulled back into this order block and what we distributed. Price again pulled back into fair value gap and we have what distributed. So order block and fair value gap is a location concept of how price will always pull back into for price to distribute. So as price has retraced into this internal raised liquidity, I expect price to come and take out this guy. Okay, okay, that's my expectation. So I expect this target. Now coming to today, I am already biased overall for bearish. Every other day, I am looking for a bearish opportunity. So coming to today, when yesterday closed bearish, I am still bearish. So I need to see again a pullback before what? Continuing. So I can choose to trade the pullback or wait for the pullback to happen and continue. I can choose to trade the pullback or wait for the pullback to continue. So how do we trade this pullback? On lower time frame, we must ensure that there is a confirmation that our pullback is ready, and we must know when to stop the pullback, because the pullback is a counter trend. It is not the main trend, so you will not be trapped in the counter trend. Remember, this is our lower high, and that means that our lower low has been what created. Our lower low has been created. Just follow me. Lower low has been created. So we want to see price pull back, pull back, pull back. Someone type in pull back on the chat box. Type in pull back, pull back, pull back, pull back, pull back, pull back. So I'm teaching you how to take advantage of counter trend now. For us to have a counter trend, there must be a pattern. Let me show you the pattern now. I have seen a break of structure. Okay, for a pullback to happen, there must be a, a break and a what? A continuation for us to pull back. If not, I'm not ready. There must be that same pattern. Sweep, break, and what? Continuation. That means a change of character in that alignment. That's a high probability counter trend. The same pattern, a sweep, a break, that suggests that we have a change of character. Then price comes back to the order block or fair value gap, and we are on the buy. Are we together now? So this is the pattern I want to see. Okay, I want to see a sweep, a break, pull back into the key level, and what? We buy. I want to see a sweep, a break, pull back into the key. Thank you, sir. Thank you, sir. Thank you, sir. My man of God. I greet you, sir. So that is what I want to see as a counter trend. If not, this counter trend is not valid. So, question, is that what we have here? Look at this very carefully. Look at this very carefully. Very carefully. Let me go to my lower time frame of 3 minutes and 5 minutes. Okay. And this is happening around the previous day um, close and previous day low. There must be a sweep, break, and a pullback. Type on the chat box again. Sweep plus break of structure equals to direction. Sweep, break equals to direction. A sweep, that's one, plus a break of structure, that's two, equals to what? Direction. What do you do next? You wait for a pullback into the key level of order block or fair value gap or Fibonacci retracement. That is your setup. Is that what happened here? You have a sweep, a break of structure, and price pull back into what? The order block of 3 minutes. And we have, you can either use a buy limit or you wait for this candlestick at 348 to break and close as a confirmation. So let's say we are conservative. We use the instant market conservative. That's our entry. Okay. You can target 1 to 5 automatically. 1 to 3, 1 to 5 on gold. You get it. Now let's assume that we are targeting 1 to 5 automatically, or we're using this liquidity. Let's see if we have gotten a 1 to 5 already. Can you see? We are already 1 to 5.5. 1.1 to 5 already targeted. Clean. This is already a 1 to 5. Already a 1 to 5. So the pattern remains the same. I said in the mentorship that market always print out patterns, similarities, and trends. Every other time, my direction must have a sweep, a break of structure. If I don't see these two things, I am not interested. As a beginner, this is what you start with. Okay? There must be a sweep and a break of structure. That suggests that we are in a direction. Then you wait for a pullback into the key level of order block, fair value gap, or Fibonacci retracement. If that's clear, type in clear. So I always say that this is not a class. If you want to have breakdown details of what we do here, you gotta join the mentorship, guys. Mentorship is key. Mentorship is key. You're just here to analyze the market, how we took the trade live, to show you that these things are simple. Strategy is simple. I dare to say it to anyone that cares to listen, that strategy is simple. Strategy is simple. Can you see? My student also caught the same trade, buy. Can you see? Caught the same trade. So when people are thinking alike, you know that. All right. Nice one, Imbole. Caught the same trade, and I didn't even send. I'm sure he didn't even look at my analysis before he placed this trade. It shows that everyone is already thinking. Okay, so once again, I'm going to drop the link for our 100 days group. Yeah, 100 days group. If you're not in that group, it's an it's a general group where we interact, we communicate, right? We share trade ideas, we share signals if need be. I don't actually like or subscribe towards signals, but of course, we share signals if we have the need to, right? We share signals if we have the need to. What we are particular about is teaching you how to fish. So you reach out to me as always, or you join the general group. The mentorship is still on for a discount. Also reach out to me for mentorship. If you know someone that needs to have this knowledge, or if you don't have the time to learn, but you have someone that you believe will learn, reach out to the person and share my contacts, share the link, let the person reach out. This knowledge is too, I would say, for me, it's too good to ignore. Yeah, you can make a living off this market, but it takes process. 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 So we are still expecting gold to buy more. We're still expecting gold to buy to where 30 minutes. If I go to 30 minutes, you will see that um we still have we have another block waiting for us here. This is 1 hour order block, right? At the origin is 1 hour order block, but at the continuation we have a 30 minutes order block. So that's why we are expecting gold to buy into. So this is my expectation for gold. Yeah, I said expecting gold to buy more. So now, if you miss the first early buy during Asian section, no problem. You wait for the pullback, okay? And if price does not pull back, make it a go. Don't worry. You catch it. You catch the trade next time. Don't chase price. Write in the chat box, everybody. Don't chase price. Don't chase price. Allow price to come to you. Allow price to come to you. Don't chase price. For those that missed this move, no problem. This is an impulsive move. Allow price to what pull back if it would. And if there's no pullback, it keeps on going, no problem. You catch the next opportunity. There's always the next opportunity. Okay. So we have gotten a new impulse. And if price wants to be generous, if you want to pull back, we have an order block here that has a fair value gap before it. So if price wants to be generous, pull back into this key level and what? Boom, continue. If not, price just goes. Yeah. So you wait. We react. We are not proactive. We are reactive. We wait for price to move and we react. So that's what I have for gold. So we watch how gold will act as London session approaches. So if there are going to be any more details, I will send to the group. That's why you need to join the group. That's why I drop updates for whatever trade ideas we discuss here. Are we together? So the two pairs I'm mastering for the next 90 days is gold and Euro USD. I dropped on my status a few days ago about the master one pair challenge. Master one pair challenge. Master one pair challenge. So we are not challenge of picking the pairs to master. So I'm mastering these pairs. Next, yep. All right. So let's move. Um, Let me quickly see something on 1 hour. If I have for a buy continuation. Okay. So this is a C. 6 o'clock has given us a CIT candle. Rally, base, rally, rally, base, rally. This is a CI. So if I want to get more buy confirmations, I'm working with this candle. I'm working with this candle for my buy. I'm working with this candle for my continuation on 1 hour. As you can see, we are already at the 0.25. So let's reevaluate this. Let's buy continuation. Okay. Let's see quickly how you can catch this move. So my 6 o'clock started here, 6 o'clock to 7 o'clock. This is the range. Yeah. Now 7 o'clock to 8 o'clock will be here. 8 o'clock to 9 o'clock will be somewhere here. So I have boxed price into this range. Look at what happened now. We have a what? A sweep, right? Price is currently at this particular key level of the 0.25. So that has given us a key level for a buy continuation. Okay. Like I said, we are at the first. We are the 0.25, and that is a risky buy. The second, the second key level will be the one at the 0.5. Okay. The third key level will be the one at the 0.75. Okay. And the last key level will be the one at the origin. These are the key levels that we have for this. So which one will be used? We don't know. This is the uncertainty of the market. We don't know which key level will be used. So it is your own discretion to now know if you are going to be using the first one, your stop loss is going to be below. If it takes you out, oh yeah, second one. If it takes you out, third one. If it takes you out, fourth one. So with your discretion, or you can just choose to use the middle line. And if I does not get there, no vex. This is the uncertainty that we embrace in the market. How that the market is a game of probabilities and uncertainties. We don't know the actual key levels that will be used. You are not the market makers. Your job is to set your key level and trust that they will hold. If they don't hold, no vex. Go to the next key level. Or at best, you just target the middle, the 50%. And if price does not get it, like I said, don't be angry. That's it. So with back testing, you will know the key levels that are probabilistic to use with proper back testing. You get that now? So I'm waiting patiently for, let me see. So for me, I'll just wait. Since I have missed Asian session, I'll just wait for New York. All right. I trust that price will accumulate, manipulate, then what distribute during the New York session. So this is for gold. Let's check what Euro USD is doing and we call it today or I take questions. Euro USD quickly. So yesterday I eventually closed my all my positions on Euro USD. All right. I closed all my positions on Euro USD. We've been selling since Monday. We caught all this sell. We caught this sell for Monday. We caught the sell for today. And I closed at this target. Can you see? I closed at this target. Yeah, it's a good profit. Okay. Now let's reevaluate what happened for Euro USD. Let's reevaluate daily time frame. Let's reevaluate what happened for Euro USD. We are still bearish. EU is still bearish. Yeah, Euro USD is still bearish. And like I said, our target, overall target, the same thing with gold. On higher time frame, you can see that price is currently respecting this order block. Price has pulled back into that daily order block. Price has pulled back. Order block is a key level that price will pull back into. So, and price pulled back, taking out this inducement. That means that our target is ultimately this liquidity. So price will not rest until it takes out that liquidity target. Price will not rest. It's a magnet. It's a magnet. Price has induced and it's going to take out this guy. So this is the confidence we have. I'm not a prophet. I'm just a market analyst that executes his analysis. Our first target is this guy. Our second target is this fine boy. And our third target for a sell is this fine girl. So Euro USD is still dropping. These are our targets for sales. I've said this before. I said it last week. I said it on Monday, and price is actually playing out. It is about the market, the footprint of the institutions. Other block on daily time frame is a powerful footprint, intention, right? Okay, so now let's come into what we have. So let me just do a review of Monday and Tuesday. I'll not go down into the chart. I'll just do it from a daily time frame. From a daily time frame, for Monday, how did I catch this Monday sale? How did I catch this Monday sale? I understood the previous day high, previous day low, and previous day close concepts. Okay, price went above previous day high, previous day close rather, as accumulation and distributed, okay, and took out the previous day low. Also on Monday for Tuesday, we have the previous day high of Monday, previous day's low of Monday, previous day close of Monday. Price traded above previous day close as accumulation, manipulation, and distributed So for Tuesday. Now we are in Wednesday now. Previous day high, previous day low, and previous day close. Price has currently also gone above previous close as accumulation and manipulation. And we are currently distributing below the previous day close. So this is the sign that the bearish is continuing. I want to give us more details because it's not a class. Okay. Previous day high, previous day close, previous day low. This is my magic. This is my edge. All right. That I use to predict the next day bias. Previous day high, previous day low, previous day close. I'm giving you my secret for free. I'm giving you my secret for free. You won't get this out there. I'm telling you. Previous day high for for Tuesday, previous day low, and previous day close. That's step one. Remember on Monday, I said step one. Step one, go to your daily time frame. Step one, go to your daily time frame and mark your previous day high, previous day low, previous day close. That is your step one. Yeah? That's your step one. So step one is done. Step one is done. Step two is I will now go to my 15 minutes time frame to look for my structure, liquidity, location, and confirmation. That's step two. Step one is done. Step one is done. So step two, we go to our what? Our 15 minutes to see the structure. Right? If you want more breakdown or more clarity of what we do, you join the mentorship. Join the mentorship. So 15 confirmation location. All right. So like I said, we are also bearish in the direction of EURUSD until further notice. Until further notice, we are bearish. Until further notice, we are what? Bearish. Until further notice, we are bearish. Until further notice, we are bearish. Okay. Our structure is bearish. Can you see? We have a new break of structure, a sweep, a break, and now we have pulled back. So let me on my Asian indicator. to see my ranges. Okay, I'm good. So Asian has given us what 20 pips. So I expect Asian I to be swept because this is Asian consolidation. Okay, so this is Asian range, Asian high and Asian low. This is my Asian range. This is my Asian range. I expect Asian high to be swept as what? As liquidity before having a good sell. Above Asian high, we have key level of order block. Yes or yes? Above Asian high, we have a key level of 15 minutes order block. So this is what I expect. This before price gets to my target, I expect price to what? To manipulate the Asian high and what? Distribute to my targets. So this is my setup for EUSD. So I watch. I'm patient. I am patient. Patient to wait for your A plus setup. Patient to wait for your A plus setup. This previous day low has given us the break of structure. This is a lower high and lower low. So I'm patient to wait for my A plus setup. I am patient to wait for my A plus setup. For you guys today. That's what I have for you guys today. Okay, let me have step two written here. Step two on 15 minutes. Structure plus liquidity. Key level. Confirmation. So what is the structure plus liquidity? Direction. That is your D. Structure plus liquidity gives you your direction. It gives you the refined direction. What does key level give you? Location. And what does confirmation gives you? Confirmation. Confirmation what? Entry. So this is what I expect on 15 minutes. Step two. Yeah. If it's clear, type in clear, 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 clear. If it's clear, type in clear, 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 clear. Right? Um,
It's 8 o'clock.
Okay. So what pair do you want me to analyze? What pair do you want me to analyze? Let me take one or two pairs that I want me to analyze. Then I call it a day. What pair do you want me to analyze if I call it a day? Okay. Once again, if you want a breakdown of how to understand the market and trade like the banks, drop me a DM. And I also want you guys to reach out, talk to your friends that there is now, therefore, an academy where you can understand the market with clarity and simplicity. All we do here is to make the market clear, make it simple. You can trade like the banks do. Understanding the concept of the smart money, liquidity, order blocks, demand and supply, fair value gaps. These are the concept of the institutions. It's not about strategies, good or bad. This is the markets. These are smart money concepts. Do you understand what I'm not saying? Smart money concepts. The market is driven by the institutions. The market is driven by smart money. Is not what you should debate about. Yes, retail trading concept can work. Your trend line can work, your support can work, but they are liquidity pools. Trend lines, support, resistance are liquidity pools that will be manipulated, stop loss haunted. So if at all we are using any retail trading concept, use them with the lens of liquidity. Let me sound this warning loud and clear. You don't debate about smart money concepts. Don't even go there at all in the industry, right? And both of them work when it comes to making money. Okay, let me end with that. We have the retail trading concepts, and I will list the concepts that are here. I'm not saying retail trading concept does not work, but I'm saying if you fail to use these concepts with the lens of liquidity, you become the liquidity. Because those retail trading concepts, we have most of them. We have the trend line. These are the two major ones. We have the support and resistance. We have chart patterns, double top, double bottom. Okay, these three concepts, they are retail trading concepts. Yes, they work. Yes, they print out money for you. But I'm saying if you use these concepts without the length of liquidity, you're on a danger zone. If you agree, type in I agree. Using trend line blindly without the length of liquidity, na danger. Using support and resistance without the length of liquidity, na danger. Using chart patterns without the length of liquidity, na wetin? Danger. So I am concluding that you can use your retail trading concept if they work for you, yes, but try to understand the institutional trading concept, even if you would use them, so that your retail trading concept can be safe. Who understand what I'm saying? If you don't use the SMC concept, understandable because you have been used to all this trend line and all that. But don't use your retail trading concept blindly without knowing where liquidity pools are. The market is all about liquidity. If you agree, type in agree. If you yes, say I hear. Because all these debates should just stop. All these debates should stop. Oh. As fuel is to a car, so is liquidity to the market. As fuel is to a car or to a vehicle, so is what? Liquidity to the market. So the market cannot move without taking out liquidity, without taking out the stop losses of the retail traders. So we need to wake up. So this is the breakdown, okay, of these two types of concepts. Are we together? I'm not getting responses on the chat box. This is the breakdown of the two types of concepts, the retail trading concept and the institutional trading concept, which we call the smart money concept. Okay? If you are going to be using your trend line and all of this, you need to understand liquidity. Liquidity. Even if you don't know just all the other ones, liquidity must be the concept you must add to your retail trading concept. All right? I don't talk my own. Using retail trading concept without understanding liquidity is dangerous. Yeah? Okay. So I end today's live. More details in the mentorship, more updates on the general group. All right.